All right. What is up, tycoons? What's up, traders? Super excited for today's video. We got to talk about gold. Okay. Now, after gold made new highs, it seems that everyone has started to forget about it now, right? But what I really love is we've followed the analysis perfectly that I have. And it seems that this ABC correction is coming to an end, right? So I'm actually going to break down the gold futures in today's video. Going to break down the chart a little bit more and zoom in and really show you guys a lot of the structures that I'm looking at for all of these charts. We'll take a look at GLD as well. Okay, GLD is something that has options. Maybe if you're an options trader, this is something that you could look at. Okay, we'll zoom in on that chart as well, and we'll take a look at SLV on the daily time frame and also zoom in on that one as well. So really great stuff in today's video. Make sure to smash that like button and subscribe to the channel if you guys are new. Today's video is actually sponsored by Simply Wall Street. It's a really great platform. I've been using it for a while, and I'm very happy to have them as a sponsor. What I want you guys to do is use the link in the description or the pinned comment. It's going to get you guys a 14-day free trial. And for those of you that like it and want to sign up after your 14-day free trial, you're going to get 40% off for the first 100 people that join. Okay. Now, I want you to use it and actually look up some gold stocks, right? Maybe there's some gold miners, or some other gold related stocks that you guys can see and potentially look at and see if they're trading at undervalue, right? If they're undervalued from a fundamental standpoint, which is what Simply Wall Street is going to do, is going to give you guys a nice fundamental analysis. That's something that, I think you guys will really benefit from. You can also email me anytime for a one-on-one personal session at ZachlyTrades@gmail.com. If you're ever interested and want to reach out, we'll work on scheduling a time together. And as always, the content provided on this channel is for informational and educational purposes only. So please be sure to read through the full disclaimer. Now, let's get into gold, okay? And when we're looking here, we definitely have this overhead supply zone, okay? It was resistance over here, and yet again, resistance again once we hit our wave 5 targets to the upside for the GLD futures. All right. Now, first off, let me preface by saying markets tend to move in 5-wave or 3-wave structures. Now, your 3-wave are usually corrective. Okay. Meaning, if you have a large 5-wave move to the downside, you usually see some type of ABC to the up, and then you'll continue that downtrend potentially with another 5-wave move to the downside. And in this case, we got a strong 1, 2, 3, 4, 5 right up precisely to the targets here. Is very beautiful to see. Then we hit that supply zone that we pulled back in the past, and we definitely ended up getting what appears to be a correction. Now, the RSI and the MACD are giving me some nice signals here, and we just need a little bit of follow through for confirmation. So if we zoom in on the chart, all right, and we actually take a look here, you can see the structure more clearly, right? We got the 1, 2, 3, 4, 5 up. We hit that supply zone up here, and then we started to pull back. We also had a bearish divergence, which I'm going to be looking for is to break that bearish divergence trend line. That's going to be a confirmation of bullishness for me. All right. If you're not familiar with bearish divergence, just take a look here. How we have a high, and then we start to create these lower highs here, right? What I want you to see is that at the same price, at the same points on the chart, we have a high, and then we come up, we create a higher high, then we create a higher high, and then we create an even higher high. So throughout this time period, the price action was going higher, right? Price was going up at this time while the RSI was going down. So this is what's known as a bearish divergence. You combine that with the fact that we were hitting this supply zone here, and I was fully expecting a pullback in gold here, and I've been waiting for this ABC correction to play out. And we've been holding the 61.8% Fibonacci retracement level here right at 1916 on the gold futures pretty well, okay? And so, I did go long. I'm not long gold at the moment. I chose SLV. It's a little bit of the cheaper version. So, gold and silver are going to move similarly. They're not going to move exactly the same. But if I see some follow through with gold, then, potentially I am looking to go long on gold, right? And so one thing of big importance right now is this purple line here. This is our year-to-date anchored VWAP. And so we need to get back above this year-to-date anchored VWAP. As you can see here, it's been a very strong resistance level. And each time that we've come back up to this year-to-date anchored VWAP, we've been met with sellers so far. So we need to see if we can get back above this year-to-date anchored VWAP. And, if we are able to start another impulsive move to the upside of bullishness, right? 2011, 2066, 2136, and 2224. Those are going to be some of the target areas to pay attention to for now to the upside. If we are able to break past our previous highs, then we'll be targeting some of these highs here on the gold futures. Now, what I mentioned about the RSI and MACD, there's question marks here because we're looking to see, is this going to turn into a buy signal, right? Typically a buy signal is when this red line crosses above, and that would be known as a buy signal. And you see we had a strong push to the upside there, right? Same thing over here, crosses up above, strong push to the upside, and it works to the downside as well, right? MACD crossover to the downside, sell signal, and we see strong moves to the downside afterwards. So it's going to be really interesting to see if we can rally and get this MACD back above the 0 line here. That's going to be a little bit of confirmation of strength. Now, one thing to keep in mind is your MACD is a lagging indicator. So what we're doing is we're combining two indicators, okay? Your RSI here, this is what's known as a leading indicator, right? So this is what's going to tell you with price action while it's happening, and potentially, when you're using those divergences, tell you what's going to potentially happen in the future, right? Indicate what could potentially happen in the future. So that's more of a leading indicator versus your MACD is actually going to be a lagging indicator, and it's going to tell you what happened after it's already happened, right? And so, we're looking to see, are we going to get the breakout through here? If we look at the leading indicator here, right, versus our lagging indicator here, we see we're already starting to break this initial trend line here. Now, these combination of trend lines here is known as an inverse bump and run pattern. I've covered this pattern a lot on the chart with different videos and different tickers and things like that. I've never really used it before on the RSI, so I'm going to see how this plays out. But really, honestly, it's a pretty bullish pattern, the inverse bump and run. And so essentially what it suggests is that you're going to come up here to this next trend line and then break out through there up towards the top of the range. And that would put us back in that overbought territory. So, I'm going to see how this plays out and see if I really want to actually use this on the RSI or not. For now, kind of just testing that out. But ultimately, we are breaking the trend line here. We have these lows, these lows, these lows, these lows, and now we're breaking out above this RSI trend line. If we can bounce off of there and come back upwards, that's going to be a good sign, okay? And initially, we have this initial bearish divergence trend line up here that we're paying attention to. We want to see if we can break through that initial bearish divergence trend line, and that would give us some more confluation of a bullish move in gold, all right? So that's what I'm looking at on the futures. When we take a look at GLD, okay, we had a nice rounded bottom here, all right, actually formed a nice cup and handle over here, and we had a nice rounded top here, okay. I typically look at rounded bottoms, rounded tops as a very easy way of spotting topping signs or bottoming signs, right? Different signals. We see this nice rounded bottom turned into an inverse cup and handle. That was very good follow through there. The big thing that really worries me when it comes to GLD and SLV, some of these charts, is the amount of gaps down that we have to fill, right? We have two bearish gaps down to fill, as well as this third one all the way down here on GLD to about 152.10. So that does worry me a little bit, okay? That's something that I'm a little bit cautious of, right? The main line in the sand where I'm really bearish below on GLD is going to be 173.63. If we fill this gap down here, that's still healthy and that's still a Fibonacci retracement level, and we could start to rally once again. But if we flip 173.63 to resistance from support, that's going to be indicative of a reversal and that we could retest some of our previous lows in the 168 area, or potentially even start heading down closer to that 152.10 gap fill. All right. The way you use these Fibonacci retracement levels is to spot the trend continuation or spot trend reversals, right? There's two ways to use them. And so in these cases, we can see here, we're in a clear downtrend, right? We move down, we retrace to the fib levels, continue the downtrend, retrace to the fib levels, continue the downtrend, retrace to the fib levels, continue the downtrend, right? And that's how you want to use the fibs, right? And so that's how we used it over here. Retrace, move up, retrace, and we're looking if all of this is just a healthy retracement to continue the move upwards, right? But you can also use it, for that move down retracement move up retracement, spot that trend continuation. You also use them for reversals, right? So when you move down and you retrace and you start to consolidate and break through those retracement levels, that's how you can spot a potential upside reversal, which is exactly what happened right here at this point in time. You see, we moved down, we retraced up here to the 61.8, and then we consolidated through here and we broke out above it, flipped it to resistance or flipped it to support from resistance. And that's when we got a reversal and started a new uptrend, right? And so that's what we need to be cautious of over here. We've had the move up, we've had the retracement, and if we really start to consolidate and chop here and break below that 173.63 level on GLD, that's when we could potentially be getting that reversal to the downside, right? So these are some of the things that you want to consider from a risk standpoint. Now, also here, we have that initial bearish divergence trend line. We see price going up here. We see the RSI going down. Our leading indicators telling us we could have a pullback. We also hit the wave 5 targets to the upside. Okay, and same thing with the MACD right here. It's very close to curling over, right? When we zoom in, we can see all of this a little bit more. All right, we have our nice rounded top here indicating, topping signals. All right, we've started the pullback. And we're going to see, can we really hold these levels and hold above 173.63, get back above that anchored VWAP and try another push up to the upside. We want to see our MACD curl up above right here, and we want to see our RSI break through this initial bearish divergence trend line that we created. Now, this is SLV. SLV looks like a big, massive inverse head and shoulders, in my opinion. And you could draw a trend line, all right, for the neckline, something like this. Okay, this would be your neckline that you're looking at. And, we've got a left shoulder over here. We've got the head. And then this would be our right shoulder right in through here that we're forming currently at the moment. And so, if when we take a look here, lots of gaps, right? We had these 2 gaps up to fill on SLV. And you can see during that really strong push, that's exactly where we came up to and where we started to top out and started to pull back. So as I mentioned with the previous charts, we've done a good job of holding our 61.8% retracement level of $20.49. Silver had a really nice strong day on market close on Friday, up 1.68%. And in full transparency, again, I am long SLV right now. What we see here on our RSI is we have broken that initial bearish divergence trend line, right? And it looks like we kind of got a breakout retest and push higher. So we're going to see if we can really continue the push upwards on SLV. When you look at your MACD, it's starting to show signs of curling to the upside. What I really like about the SLV chart here is we also have bullish divergence here. Okay, so we have a bullish divergence where essentially right here and right here. Okay, so we talked about bearish divergence. Bullish divergence, is obviously the exact opposite. What's happening here is we created a low and then a lower low, but at these points on the RSI, we had a low and a higher low, and then on the MACD, we had a low and then a higher low as well. So we're seeing bullish divergence on the MACD and the RSI for SLV. I really like that. Right, we're seeing our leading indicator with bullish divergence, and we're seeing our lagging indicator with bullish divergence. So I'm looking to see a strong push up, right? We have a gap fill right here, right around 21.81, and then we also have another gap fill here around $23. But on the much larger, bigger picture, right? If we take a look again, this is our inverse head and shoulders neckline, and if we break through there, we could potentially be heading up towards $25, $26, $27 on SLV. So that'll be a really interesting thing to see how this develops, right? When we zoom in, these things are a little bit more clear. Okay, we can see these gaps up that we have to fill on the chart. Again, this is our anchored VWAP right here, year to date anchored VWAP. We still are trading below that anchored VWAP, but you can see the bullish divergence even clearer here, right? Where we have the low, then we have the lower low, then we have a low here, higher low, low here, higher low. So, we're going to see how these trades play out. A lot of people were extremely bullish on gold, previously in the year. And, since the pullback, everyone seems to have gone quiet, right? And it's really funny, really interesting to me how everybody just goes quiet and they completely forget their whole bullish thesis. People were saying that gold was going to continue rallying for the entire year and that it's actually in a new cyclical bull phase and that it's going to continue rallying for a long time. And as soon as these things start to give back some gains, everybody seems to go quiet. I've really been quiet on gold and silver because I showed you guys the analysis, right? We had the 5-wave move to the upside. We're expecting this ABC correction, 1, 2, 3. And I'm going to see if this is really an ABC correction, or maybe I'm wrong, right? And maybe we're actually going to get a stronger move to the downside. And rather than getting a corrective ABC to the downside, we could start a larger structure and a more bearish structure, 1, 2, 3, 4, 5, or something like that to the downside, and look to fill these gaps. So really, that's what I'm paying attention to right now. Hopefully you guys enjoyed this video. Don't forget, you can always email me if you ever want to do a one-on-one personal session. Just shoot me an email, ZachlyTrades@gmail.com. We'll work on scheduling a session for you guys. And don't forget about today's sponsor, Simply Wall Street. Okay, it's a 14-day free trial. I'm telling you guys, you're really going to love it if you use it and take advantage of the 14-day free trial. And if you do decide to purchase, the first 100 people that purchase, they do get a discount of up to 40%. So that makes it really affordable, especially if you get the yearly plan. It puts the price at under $200 for the entire year. I think you'll really like it. So appreciate you guys watching. I'm out.